All right, welcome back to Robinhood Stock Market Watchlist Group. My name is Carlos, and today is Sunday, August 21st. We're going to go over our weekend meeting today and kind of go over a lot of scheduled activity that's going to create a lot of volatility. And this is very, very important information that we need to know. We are using a slightly different setup with our meeting. We're using some Facebook audio and video capabilities. So the members that are in here, are you guys still able to hear me? Just want to make sure we're not having any program interference.
Yep, good to hear you.
Okay, good. Okay. Just want to make sure because multiple programs may be using the microphone, so I just want to make sure we're okay there. So again, we always like to kind of go over things that are going to create a massive amount of volatility. So one of the most important things to really look into first is economic reports. Economic reports have a huge impact on the stock market because it always provides us information and clues on what the economy is doing. Is it declining or is it inclining? Is it bullish? Is it bearish? And so a lot of times when we're looking at that kind of information, there's a lot of forecast type of information too that even Wall Street is aware of. And so if they're heavily into that information too, we have to be just as well. And one of the best places that I've been able to utilize that information is from investing.com, and it's also an application you can download to your mobile phone. But to access the economic report from the front of their website, you can just go to their popular bar right here, and it's over here in the economic calendar. But if you're looking at it on your mobile phone, it would be on the very bottom middle area. It should be like a calendar icon. You'll click on it, and there'll be several different choices between your economic calendar: holidays, earnings, dividends, splits, and so on. In this case, we want the economic calendar. That way we can kind of take a look at what we need to see. So first, there's a few things that we need to do. Once we're here, we need to click on this week. That way we can see everything pulled up. And at first, we're going to see a lot of gibberish. Maybe some pop-ups too that we'll just need to close. But the gibberish stuff we need to get rid of for now. We need to fine-tune it a little bit by clicking the filters button. Or if you're on your mobile device, it should be a little funnel icon. You want to click on that, and a little menu will appear. Well, first you want to clear everything. Just clear everything, because there's only two things that we need to see. We need to scroll down, click, put a check mark under the United States, and then under importance, you'll see a 1 star, 2 stars, and a 3 stars. We want to put a check mark under 3 stars because we're telling the system that we want to see everything that'll have the biggest impact on the United States stock market. Once you do that, click apply. And then when you do that on your device, it should automatically remember it. But if you're doing it on the website, you'll have to kind of keep inputting that same information in there. However, we're seeing the most important scheduled economic reports that have not happened yet. But this will provide us information whether these days will be bearish or bullish. And we may be able to kind of tell if the morning will open in the red or the green, or if the stock market may close in the green or in the red. So but obviously we don't see a Monday yet, because Monday is just kind of like coming back from the the weekend and trying to absorb weekend news and everything, but also kind of getting ready for the week. And so Monday, we'll just kind of have to wait and see with the U.S. futures, kind of whether it's kind of bullish or bearish. And so, but going into Tuesday though, these are going to be huge reports, and a lot of these reports are either going to be weekly reports, they're going to be monthly reports, quarterly reports, or they could be yearly reports. Now, the more rare that these reports are, the more volatile that it'll provide that day. So for Tuesday, we have a monthly report. So that's a pretty good amount of volatility right there. And because it just doesn't happen that often, only once per every 30 days or so. And so, but it's also important to recognize the time and knowing your time zone and what time that this is. And right now, if you're looking at on the website, it'll usually default to the Eastern time zone. But if you're on your mobile device, the time is going to be based on your time zone. So it's just really, really important that you know whether if the economic report is going to be released before opening or after opening, because it may affect the pre-market. And a lot of times the economic report may be too predictable that it may the stock market may react to it before it's even released, and so it can really provide us some clues of how the how it's going to play out after the report is released. And so if in Eastern time the stock market opens at 9:30 in the morning, so this is telling us that this economic report is going to be released 30 minutes after the stock market opens. And so usually the first hour and the last hour of the day is the most volatile time. And so usually within that point, it kind of calms down and slows and starts to kind of mellow out. But sometimes these reports are scheduled at perfect times. That way it can help continue more momentum. And so in this case, the new home sales, which is brand new, built, and not and so and this is huge, but not as huge as maybe like existing home sales, which really holds the majority because we're usually in the millions on that one versus 500,000. But still, it has a strong impact because it just provides economic growth or decline. And so the previous report, let me go back here. I had to kind of mute one of you guys here. Okay, so the previous report was 590,000, and the forecast report is scheduled to be 575,000. So this is showing that it is expected to have it decline, which is bearish. And so if it meets or beats the previous, that should provide bullish characteristics. If it falls below the previous, I would expect, or wait, let me say this again. If it meets or beats the previous, that should provide bullish characteristics, and that would probably be unexpected. That'd be very unexpected. We could still see bearish characteristics, but it could easily reverse and because one day this is going to happen where all of a sudden our decline is going to stop and things are going to start to continue to grow. The government and the news companies are going to say, we now see a slow growth in inflation. We see a slow growth, or a slow, rate of where things are slowing down, of inflation, meaning where they see the light. They can see where it's not too far, where we could begin to see economic growth. And once they provide those clues, we'll see a massive amount of bullish characteristics that we saw not last week, but the week before. They did that. They said that the inflation is cooling down, and all of a sudden, boom, for like several days, things just skyrocketed. And so, but like I said last meeting, though, usually, we're seeing this weekly algorithm where one week it's doing that, and the next week, it's down, but it's still higher than it was the week before. So that means this week, we should see, some bullish characteristics, but we may need some manipulation from the, from wherever, to help provide, more bullish characteristics over these bearish economic reports, because that's what happened last, the week before. So that could easily happen again this week. So, but if you're not sure what these economic reports are, be sure to click on them, and a new paragraph will open up, and that way you can try to understand what they are and how that'll have an impact on the stock market. After a while, when you are looking at this regularly, you'll just automatically know, because because these are pretty repetitive. And so for another example, the core durable goods orders month over month for the month of July. So this is another rare economic report. But in this one, it is scheduled to be released 1 hour before the stock market opens. So this is going to provide a massive amount of volatility, which could be great for those that love to straddle. Straddling is a great option strategy where we can bet both calls and puts, meaning where we bet a stock goes up and bet a stock goes down. And I know that may seem like it's conflicting each other. Why would we bet a stock goes up and down at the same time? Well, I always say you can only lose what you have on one side, but your gains on the other side are potentially unlimited. Meaning, worst case scenario, you lose 100% on one side, but you should gain like 200 or 500% on the other side, which washes out the loss on the other hand. But it's better if we are expected to know that there's going to be a lot of volatility going on, especially in pre-market. That way, when it comes to opening, that there's these big, massive swings in either direction. Because when you're straddling, it doesn't matter if the stock market surges up or plunges down. As long as it picks a direction, it's going to be profitable either way. And usually, a great strategy for straddlers is that we'll buy maybe 5 or 10 minutes before the stock market closes, and then we'll sell the next morning, and we can sell at the same time or at different times. It doesn't have to be at the same time. We can sell at different times to maximize our gains on one side and minimize our losses on the other side. Sometimes we can convert our loss into a gain and gain on both the calls and the puts. So the next report is going to be your pending home sales month over month report for the month of July. Oh wait, hold on. So the forecast part again, we missed that part. So for the core durable goods, so the previous report for the month of June was at 0.4%, and even at that point was down quite a bit. And this forecast is saying that it's expected to be down even less. And so again, if you're not sure what these type of reports are, feel free to click on it. That way you can try to understand it, and it'll show just a little paragraph of what it is and how it will affect the stock market. So in this case, the core durable goods orders hold on here. The core durable goods orders measures the change in the total value of new orders for long-lasting manufactured goods, excluding transportation items. Because of aircraft orders are very volatile, the core number gives a better gauge of ordering trends. A higher reading indicates an increase in manufacturing activity. And in the bottom here just shows how it will affect the market. For example, a higher than expected reading should be taken as a positive or bullish for the US dollar, while a lower than expected reading should be taken as a negative or bearish for the US dollar or the stock market. And so again, like I said, it's just really important that you are aware of what these are and how it'll affect the stock market. Now, most of the time we need these numbers up, but there's two reports that we need down, such as the crude oil inventory levels and the initial jobless claims. Those are that's the unemployment rate. So these numbers we need down. If those are down, that will be bullish. So like I said, it's just kind of the opposite. Because with oil, if people are driving and flying, they're traveling, they're spending money on that and spending money on other things, recreational activities or other activities and whatnot. And then jobs, people are working, they're paying taxes, that they're getting money, and they're shopping, and they're just helping the economy. And so these are just really, really important economic reports. And then so the pending home sales for the month-over-month of July, this report looks like it is scheduled to be released 30 minutes after the stock market opens. So we got a great amount of perfectly timed economic reports to create a massive amount of volatility. And sometimes these reports can provide a mixed characteristics. You know, like maybe the morning opens up in the red, you know, an hour before the market opens, and then we get maybe a good decent report, even though, I mean, this isn't, but if they start saying, oh, you know, things are slowing down, things could be looking better, again, like I said, that could provide a massive amount of bullish characteristics if they see light ahead of the tunnel. And so but 30 minutes after the stock market opens, pending home sales report, previous report for the month of June was negative 8.6%. That was a crazy amount. I think that was like double or triple the amount that was forecast. Very unexpected. So, but they're now saying kind of the same thing. They're being a little bit more aggressive, just not as aggressive before. And so, but yeah, almost down another 4%. And they're going to say things like home sales are down in the last 6 or 7 months, and so you know, that could also provide a lot of bullish characteristics, because that could scare Wall Street, that could scare investors, as well as all of, you know, and so that could provide a lot of selling activity, and so yeah, that could really provide, you know, a pretty red day. And so crude oil inventories levels here, as we were just talking about, is expected to be released 1 hour after the stock market opens. So we don't have a forecast yet, but that could easily change later on today or tomorrow morning. So Monday morning during pre-market, we should see a forecast number in here. But typically, as I've always mentioned in our meetings, that usually what we're seeing is kind of like a yo-yo effect, because gas prices have almost like doubled in a short period of time. What we've seen is that, you know, most Americans are getting paid every 2 weeks, and what we're seeing is that they're filling up at their favorite gas station and trying to make it last for a couple weeks. And so, but what we're seeing is that a lot of people are consuming gas 1 week and not the next week. So we're seeing inventories down 1 week and then up the next week. And so last week was the down week, which is bullish. This week is I would say that it should be forecast up, which is bearish. So I'm seeing a lot of bearish economic reports. Bearish, 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 bearish. It is not looking good so far. So I'm hoping that that we have a couple, you know, we still have a lot. We're in the middle of our bull season. The bull season is the summer season. We're smack dab right in the middle of it. So that's where it's going to provide a lot of bullish characteristics. This is where the force is very strong at this point, and so even though there could be a lot of bearish characteristics, it may not phase it as much as it used to. And so, but like I said, if the government or the news media companies or whatever starts promoting that they see kind of light at the tunnel, that could manipulate the stock market, or it could easily change and go bullish. So, but to be determined. Thursday we have the quarterly report. Again, as I mentioned, the more rare that the report is, the more volatile that it'll be. And the GDP report, that is huge report, because it helps provide us more information on the recession, and the recession has been such a mystery on the media. I mean, it's just plain as day. We are in a recession. I mean, two quarterly reports two quarters that have an economic decline is considered a recession. I mean, you can add things to it or whatever as much as you want to try to justify whether, you know, if this is a recession or not. That's just, a recession can be minor, it can be severe or whatever. I mean, right now this is just minor, but you know, things are going to get more interesting once we get into the next bear season, because the recession is going to kind of amplify at that point, and that's going to be one of, I think, the things that the media is going to use to make a bearish season more bearish. But I mean, there's just going to be a lot of crazy things going on. For now, we're like surfers. We're riding the wave. We just got to enjoy it, and make a lot of gains, going upwards. And but we just have to really, be cautious, and that's why a lot of investors and traders will straddle both calls and puts. That way, it's kind of like an insurance play. Even though we can try to forecast and predict as much stuff as possible, but we can't always predict manipulation. Manipulation can happen at any time, and that's where we can see some pretty big movement. So we always got to be ready. One of the best ways to be always ready is always have your insurance play of straddling. Make it a rule. Don't have a call without a put. Don't have a put without a call. And so the GDP report is scheduled to be released 1 hour before the stock market opens on Thursday. It looks like so far, out of every morning this week, Thursday morning is going to be the most volatile day this week, and which is prime for straddling, because we want this day to either go up a massive amount or down a massive amount. But the forecast and the previous report looks very bearish. This is still showing a decline in economic growth for the second quarter, which is just more reason to justify that we are in a recession. And that's just information that the news is going to use to create this volatility. And so but yeah, I mean, it's just more decline. That's just, and then unemployment report, it's been very kind of volatile as well. It's just been kind of going up. If we can see this down significantly, we could easily see some mixed characteristics. But overall, I mean, this is a weekly report versus a quarterly report. This quarterly report is going to dominate the unemployment report to the point where it's like not even going to be probably existent for that day. It's not even going to think about it, I would assume, because the quarterly report, this is huge. This is the biggest one this week. And so, yeah, this is going to be minor. So Friday, we also have the the PCE price index report for month over month for the month of July. So Friday, so normally we don't see economic reports on a Monday or a Friday. Usually it's a Tuesday, Wednesday, and Thursday, and that's it. So this is kind of like adding just another cherry on top for the bearish characteristics, but it's still nice to see that at least this report is also during pre-market adding more volatility during the market during opening, which is great for those that love to straddle. That way, when we open up, we can open up in a very profitable stance. And so this is huge. I don't know if anybody has anything that they want to provide for the economic reports, or if anybody has any questions, feel free to unmute. You can voice chat, or you can chat in our little messenger or Facebook Messenger chat rooms. I don't see anything on there. A couple of people have mentioned something, but the next thing we want to go over is earnings. There's some huge earnings that we need to go over. Just want to make sure, get the message out there. Okay, so so every Saturday in our Facebook group, I'm always posting stuff daily, but Saturdays, I always post a lot of the scheduled earnings report for the next coming week. Now, all of my posts are always saved under the featured area. When I created this group almost 4 years ago, this was like my bookmarks. Anything that I wanted that was really important, that I wanted to save, kind of like on the cloud. kind of thing, I saved it under the featured area, and it just allowed you guys to catch on to that, and that way you can see all of the stuff that I post regularly and consistently. And so this is the this week's scheduled earnings. Okay, so this week's scheduled earnings, there's just a lot of stuff going on between Zoom and Macy's, XPeng, and JD, Dick's Sporting Good, Intuit, Nordstrom, Petco, Nvidia. It's probably the biggest one this week, next to Salesforce, Snowflake on Wednesday. Thursday we have Peloton, Dollar Tree, Dollar General, and then after close is going to be Affirm. And so there's still quite a bit of some retail sales stuff in here. So you know, the retail industry is going to be very volatile this week, as well as some of the technology group and semiconductors. That's a huge one as well. And so and then either Saturday or Sunday mornings, I'm always posting the top 10s an analysis this week. Let's start with Nvidia. Nvidia is confirmed to release their earnings report on Wednesday after the stock market closes. The company's earnings release has a 59% expecting an earnings beat, which is about average. Usually average is around 65%, so it's a little below average. I wish I could see that a little higher. Being in that 59% just kind of feels like it's 50-50, and I just don't, you know, that's just kind of interesting. However, option traders are pricing in around a 7% price movement in either direction, where in the past it's averaged around 5%. Next one is Zoom. Zoom is scheduled to release their earnings report on Monday after the stock market closes. The company's earnings release has around a 57% expecting an earnings beats. However, option traders are pricing in around a 14.5% price movement in either direction, where in the past it's moved around 8%. So for some reason, option traders are pricing in a lot more volatility with this one, and for some reason, and maybe because maybe we're headed towards back to school, or maybe because well, again, this is for last quarter, maybe because, you know, I mean, yeah, I mean, this used to be a pandemic stock too. I mean, this was one of those ones that was highly used as things were shut down, and it's just slowly people not using it as much. Just like right now, we're not using Zoom. We're using this. We're trying out Facebook's version of it. So this is going to be kind of interesting to see what happens with Zoom video communications. Next one is going to be Macy's. Macy's is confirmed to release their earnings Tuesday morning before the stock market opens. The company's earning release has around a 53% expecting an earnings beat, and that's definitely kind of 50-50 right there. Option traders are pricing in around a 12.5% price movement in either direction, which is that's about average, because normally it moves around 11%. It's a pretty volatile stock. And then next one is Salesforce. Salesforce is expected to release their earnings report on Wednesday after the stock market closes. The company's earnings release has around a 70% expecting an earnings beat, which is slightly a little above average. The option traders are pricing in around a 7% price movement, where before it usually averaged around 6%. Next one is XPeng. XPeng is definitely going to provide some volatility in the electric vehicle segment, and particularly the Chinese electric vehicle segment. So it will affect NIO as well. And so XPeng is confirmed to release their earnings report on Tuesday morning. So you guys, we have some time Monday to strategize a plan with these. And so the company's release or earnings release has around a 64% expecting an earnings beat, which is not bad. Again, that's around average. Option traders are pricing in around a 10% price movement. Like I said, others will kind of follow. Maybe not quite as much, but like I said, if Xpeng moves 10% up or down, we could see NEO move maybe 5% up or down. Just depends on what happens with this. And so, but it's very, very important to watch. And then Peloton, this is a very important one to watch right now. So Peloton, as you can see, an image can say 1,000 words, and that's why I like to kind of, I have particular images I like to use with these, because we can see that Peloton, if you don't know what the company is, at least the picture can kind of tell you this is fitness equipment, and which Peloton was huge during the pandemic. And so but they slowly, since the economy shut down, a couple of years ago, they've just lost their momentum. I think they've had some legal issues, and so they're trying to figure some things out. And so Peloton is scheduled to release their earnings on Thursday morning before the stock market opens. So at least you'll have until Wednesday before the stock market closes to figure out a strategy. However, the company's earnings release has a 2% expecting an earnings beat. 2% expecting that this stock will go up, or what's the opposite of 2%? 98% expecting an earnings miss. That, I don't think I've seen these numbers quite like that. And however, option traders are pricing in a 22% price movement in either direction, and most likely this is saying this is going to go in the downward direction. However, since the pandemic, the stock has averaged around a 14% price movement in either direction. So this has been an extremely volatile stock, which is a perfect ingredient for straddling in either direction. So if you straddle both calls and puts on this and it moves 22%, again, you're going to lose 100% on one hand, but you could potentially, and I've seen you guys do this, where you've gained 4,000% on these types of big movement. It could be a 20% movement, 30% movement, or 40% movement. That is huge gains in the options world. That surpasses that. Now, there is always the chance of what's called an IV crush. Now, an IV crush stands for implied volatility crush. And that's in case if something happens and all of a sudden the news got manipulated or the stock got manipulated. Or what if all of a sudden before the stock market closed, that all of a sudden the earnings was released prematurely or accidentally or whatever, and it just created some weird volatility with the stock, and then all of a sudden the earnings are out and it's like 0%. It doesn't move either direction. Well, that's when the implied volatility can crush both both sides, both your call and the put, pretty significantly. And so when we're playing options with earnings, whether it be a call or a put or straddling both, these are what's called a lottery play. A lottery play is no different than if you were to get a lottery ticket. I know some of you got that Mega Millions not too long ago, and hoping that you would win. But if you didn't win, it was money that you're not going to miss. But with these earnings, if you hit, where you're supposed to be, you're going to make a substantial amount of money from it. But you may have to go through a couple of them first to get that big one. But if we can know more information on what a stock is going to do, that is only in your favor. So the next one is the JD.com. This is a Chinese. I can't. It's not the website. I think it's a shopping thing. I just can't remember which American brand I can compare it with. But the JD.com is confirmed to release their earnings Tuesday morning, and the company's earning release has a 63% expecting an earnings beat, which is right around average. That's good. Option traders are pricing in around a 7% price movement, which is a little more than average, because normally average is around 5%. So this is decent movement. Next one is Snowflake. Snowflake has confirmed the release of their earnings on Wednesday after the stock market closes. The company's earnings release has around a 62% expecting an earnings beat, which is right around average. That's good to see. Option traders are pricing in around a 12% price movement in either direction, where before it usually moves around 8%. So option traders are pricing in a little bit more volatility with this one. And as you can see with the image, you can see that they are, they're like a software, company that, develops, a lot of applications and security. Next one is, I don't know how to pronounce that one. But obviously, again, a picture can say 1,000 words. They're a networking company. And so this company is scheduled to release their earnings on Monday after the stock market closes, so you'll definitely have plenty of time to put this on your watch list. The company's earning release has a 83% expecting an earnings beat. So far, this is the highest percentage that we've seen, but not the lowest like the other one. The option traders are pricing in around a 9% price movement on this one, but before most people, or most of the time, we'll see it around 6% price movement in either direction. Next one, I think last but not least, is the Dollar Tree. The Dollar Tree is scheduled to release their earnings on Thursday morning before the stock market opens. The company's earnings release has a 69% expecting an earnings beat. So that's slightly above average. And that may be because, and we've seen that it's interesting because when we watched Walmart go through their earnings, they warned the public a couple weeks before the earnings release was that their revenue has been down, and not to be shocked if they missed their earnings, and then all of a sudden they beat their earnings. I mean, they manipulated their stock like no other. And so but what we're seeing, since the inflation has been going up, a lot of people a lot of more people are trying to not save money, because you can't save money in this type of economy, but you're just trying to get more bang for the buck, and they're trying to, even if they have to drive a little further away and pass maybe their own local, family-owned grocery store, where they would probably have to pay 20% more than they would at Walmart. They'll drive the extra distance and go to Walmart or somewhere where they can get the maximum savings, and that may include the Dollar Tree. And so we could easily see an increase in sales for the Dollar Tree, because people are trying to get the most for their money. And so option traders are pricing in around 9% price movement in this one. That's about normal. It's about average. It usually moves around 9%, which is a good swing. And so once we kind of do our due diligence on this, every Sunday morning, investing.com will post the top very important things to watch this week. And it's important that we look at this just to make sure we didn't miss anything. And so in the week ahead, investors will be focusing on a speech by the Federal Reserve head Jerome Powell at the central bank's annual conference in Jackson Hole for insight on the future path of interest rates. So the speech could shake up markets, with the rally in the United States equities already showing signs of slowing. The United States economic data will be in the spotlight as fears over the prospect of a recession linger. Meanwhile, the PMI data out for the Eurozone and the United Kingdom is expected to point to further slowdowns in the business activity. Here's what we need to know to start our week. Number 1, Jackson Hole. Investors will be eagerly awaiting the Jay's Powell's speech in the Jackson Hole, Wyoming on Friday for possible answers about how high the United States interest rates may go and how long they will need to stay at elevated levels to bring inflation back under control. The Fed has hiked interest rates by 225 basis points since March in a bid to battle inflation, which is running at the highest in 4 decades. Fed policymakers have reiterated that there is still a way to go in their inflation fight, pushing back on expectations of a peak in inflation and a so-called dovish pivot, one narrative that has helped boost stocks. Last week's Fed minutes showed that while the size of the September rate hike is still in play, policymakers felt there was a little evidence so far that inflation pressures are subsiding. Powell is likely to remind investors that with one more inflation report and another employment report is still to come before the September meeting, officials still have time to decide how large the rate hike should be. So this, once they provide this information, like I said, this is going to manipulate the stocks. It'll either create fear, or it'll help pump the market up. It just depends on what they say. Oh, this time we're gonna slow it down. You know, it's not going to be as much. Or whatever, you know, then that'll provide bullish characteristics. But if they're going to be aggressive or continue to be aggressive and say, oh yeah, we should do another, you know, 0.75%, you know, that's pretty aggressive, and so we could easily see a lot more bearish characteristics. So it really to be determined. We got to really focus and watch what's going on there. So number 2, this is one thing that we've really talked a lot about today during our meeting. The economic calendar for the coming week features July figures for the personal income and spending, which includes the personal consumption expenditures price index, the Fed's preferred measure of inflation. In the 12-month through June, the PCE price index advanced 6.8%, the largest increase since January of 1982. Other data points include figures on revised second quarter gross domestic product, which initially showed a contraction of 0.9%. There will also be reports on durable good orders, the initial jobless claims, and the PMI data for July. Meanwhile, the data on new homes will shed more light on the cooling housing market, which is bearish. Number 3, stocks. The U.S. stocks have rallied since the start of the second half, boosted by stronger than expected corporate earnings and hopes that the economy can avoid a recession, even as the Fed hikes rates to curb inflation. Markets have gained despite warnings from Fed policymakers that expectations of the peak in inflation and so-called dovish pivot from the central bank may be premature. But there are signs that the rally may be starting to slow down after Wall Street's 3 major indexes all ended last week lower. The S&P, blah, blah, blah. So we'll just pass that part. When markets participants start to return from their holiday and look back, they will find that central banks are still far from having achieved their goals to reining in inflation. That means a continued tussle between central bank tightening expectations and recession fears. And then number 4 was the Eurozone PMIs, and then number 5 was the United Kingdom PMIs. So, and that'll provide a little bit of volatility with our market, but the main ones are going to be these top 3. And so the next important thing that is important that we go over is options activity. So options activity, we usually like to use barchart.com. It's a free website, but they do offer some premier information. And so we can easily see some information like crude oil is right around $90, so it hasn't really moved much in the last week or so. But options, we want to click on the menu area, click on options, and then we want to click on most active options. So it's going to summarize the whole entire system all on one page. And so, but this is basically, as we're looking at this during the weekend, this is basically going to be the last trading day's information. So this is Friday right at close. So we're seeing the whole, and this was quite a bit of volume right here. And again, volume is always the current day's buying and selling activity. So Bed Bath & Beyond had dominated this list, down 40%, which is massive. And so I want to show you, what if you straddled Bed Bath & Beyond. So there's another website that we use, NASDAQ. With NASDAQ, we can find out the most active individual calls and puts for a particular stock. So look at this here. So let's say that you were holding on to let's say you were straddling Bed Bath & Beyond, and yeah, your calls, you're down, you're basically, those are toast, down 99% or 100%. But the puts, your puts over here are up 300%. So that 300% washes out your loss on the other one and continues to put you ahead significantly all in one day. So that is why it is so important that we straddle, but making sure we do it the best we can. And so Bed Bath & Beyond definitely dominated the list, but not by a whole lot. Tesla and Apple are always number one and number two, or Amazon, since their split, has now been always number three. So we have our top three guys right here. And the reason why traders like to trade Apple, Tesla, and Amazon is because they're pretty predictable. They don't move very much, but when they do in the options world, it's significant. It's huge. Like, for example, every 1% Apple moves could be like a 20 or 30, 40% movement in either direction. And so, but Apple's just very, very predictable, especially when you're utilizing the moving averages, the charts and the graphs. It can really help provide you good buying and selling signals, and that's something we can get into here in a little bit. But notice that now we have a call and a put percentage. So the pro traders have this saying, follow the money, and there's several different ways we can follow the money, and one of them is utilizing these percentage calls, because if one is significantly higher or lower, then that is more dominant. That means investors are more sure that it's going to go a particular direction. But so far we see almost a 50-50, except for AT&T. Looks like it's more of a 65% betting against it, betting on puts. But then if we scroll down a little bit more, we have this Claris Corporation, CLAR. It's around $27 a share. However, we have a 97.6% call ratio. That means out of this amount of volume, that they're betting that this stock's going to go up, whether it be that day or most likely the next trading day. So this is huge, and we must consider this unusual activity, because it is unusual. We don't normally see this. You see the whole page, that looks normal, 50-50, blah, blah, blah. Then 97, that's unusual. And the other unusual thing about this is Claris is not normally on this list. Normally when we're looking at this page, we see regulars. It's just like a business. You have regular customers that come in, you'll know their name and whatnot, but all of a sudden, you'll see somebody that comes in that you've never seen before. So this is very similar to that. And so all of a sudden we need to know, what this company is and what's going on, why is it down, but everybody's betting it's going to go up, because it's probably going to recover, and it could recover a significant amount that could be extremely profitable. And so that's just huge. But also within this barchart.com website, we can also click on the options volume leaders section. So when we click on that, now it's going to sort out all the entire system's most active individual calls and puts. But when we're looking at this during the weekend, it's important that we're not looking at something that's already expired, because if it's expired, it's not going to do us any good, going into next week. And it'll end up being removed as we go into tomorrow anyways. So we need to just make sure we just pretend it's not there, and go down to the next valid one. And so a good way to tell is by maybe looking at the DTE. The DTE is the number of days until that expires. So if you see 0, that means it's expired, and you can look at that. You can also look at the expiration date, but this is probably going to be the easiest one. So 0, avoid. Go down to the next one. So that means the next most highly active individual call and put out of everything for Friday is this $170 put strike price that has a volume of around 73,000 and an open interest of 32,000. Now, if you're just now getting into options, or if it's new to you, open interest is the total number of open contracts, option contracts that have been traded, meaning bought, but not yet liquidated, meaning sold via offsetting trades. And so this means, and this is prior information. So that means, so the volume is Friday's information. Open interest means it's the previous collected data from before Friday. So this is basically Thursday and before. So if Thursday and before have accumulated 32,000, let's say, people holding or whatever, and we have a volume that has exceeded that, this is showing unusual buying activity and pure buying activity, because they're buying and they've probably been buying this all day Friday, because Friday I think it's been kind of slowly downtrending a bit, but a lot of people are probably bearish. As we were going over the economic reports and stuff, next week looks very, very bearish. And so we can easily see, especially before the market, because when the market is open, this information updates every 15 minutes. All you have to do is click on the refresh button, and then it's all new, updated information. Sometimes you may see something on the bottom every 15 minutes as you refresh. It may be trickling up the list. I call that flying underneath the radar. This is your radar. You just have to be able to identify what's going on in front of you. And so we see this. So this is another clue, a bearish clue going into next week. But we're also seeing a call right below that with a slightly lower volume. So definitely the put is more dominant. But we could be seeing more straddling activity. People just aren't sure what next week is going to be like going into Monday, but they anticipate that it could be pretty volatile. So they're buying both calls and puts of Apple going into next week, but probably more probably 60% puts and 40% calls. And that's okay. It doesn't always have to be 50-50, but if you're unsure, that's okay. But if you're more sure that it's going to be more one direction than the other, do this 60-40, 60% puts, 40% calls. In case if you're wrong, at least if it goes the other direction, it could still be a wash. Unless it goes significantly the other direction, then it could easily turn it into gain, and you'll still be like, man, I'm glad I did that. And so so yeah, but if you go beyond that 60-40, like if you're at 75% one way and 25% the other way, and if it goes, if it's not in your favor, you could be at a loss, and it could take a lot more to put you in a wash. So that's why I suggest don't go beyond the 60-40 if when you're straddling or strangling. And so the next one is the T. T is, I believe, AT&T. So we have a $18 put, but this one expires in 91 days, so mid-November. Very little open interest, and now we got a lot of volume. So there's a lot of people that are very bearish on this one. So then we have Oxy. They're the one of the oil companies. We have a call, and it's already over the strike price. They call that in the money. And so this expires this coming Friday on August 26th. Very low amount of open interest and a very unusual amount of buying activity. And so yeah, there could be a lot more calls, activities. We got a 77, and so, but yeah, that one expires. People probably sold that one, jumped into the other one, and so there definitely could be more going on with Oxy. And so be sure to put that one on your watch list as well. And then Claire, we saw some unusual activity on Claire. It looks like we have a $30 call strike price. It's currently at $27.74 with an expiration date of October 21st, which is approximately 63 days from now. We have a decent amount of a collected amount of open interest, just under 25,000, and a good amount of volume at 50,000, just to add more to it. The next one, we have more Apple calls and puts, more straddling down there, and some more down below. But be sure to check this website out regularly. And now we can also check the straddling and strangling areas. There's 4 sections of them. I recommend checking those as well, because we may see unusual straddling activity in here. And I'll show you how to do that. So when we click on these, what we're looking for is a multiple of the same thing. So that way it's showing that a lot of people are straddling and strangling either the same strike prices or different strike prices, but it's just showing that investors anticipate a lot of movement, but they just don't know where. The difference between a straddle and a strangle. So a straddle is the same strike price, but still betting the stock goes up and betting the stock goes down. Strangle is the same concept, betting the stock goes up and down at the same time, but with different strike prices. One strike price could be maybe $5 higher than the share price, while the put may be $5 lower than the strike price. But it's all the same concept, and we still need to see multiple of the same stocks in all of them to identify any kind of unusual activity. So looking at this, I don't see multiple of the same stocks, so we'll skip to the second page and see if we can find anything here. So we'll just start from the top, work your way down, and see if we can find something like 3, 4, 5, 6, of the same things. If we see, 2, that's not really much. So we want to see a lot more than that. Otherwise, we always want to default to trading the stocks that the majority are trading. And again, that was Apple, Tesla, and Amazon as our default. Those are the ones that we trade heavily on. Anything else is like secondary. So again, we follow the money, and these are our strategies and our rules. And so I see a couple AMDs. There's one AMD there. There's another one there. We mentioned semiconductors in our meeting today regarding the earnings. Nvidia will affect other semiconductors, particularly AMD. AMD will be affected by whatever happens with Nvidia, and so as well as some of the other semiconductors. I don't see. Oh, there's a couple Amazons. There's one there. Just not seeing 3, but at least we're seeing a couple different ones here. So we'll go to the next one. Last but not least, we have Zim. Zim was the Zim shipping. I think they had earnings last week, and we're seeing a lot of Google. Wow, we got 1, 2, 3. There's a 4, 5, and there's a couple other ones. So I think we found what we're looking for, our unusual activity, and that is Google. So that there's another one we got to put on our watch list for this week, because investors are anticipating a massive amount of movement. They just don't know which direction, but they do anticipate it should be a very good amount of movement for Google. So that's going to be very interesting. So I'm glad that we found something there. And so, and then we can always go to the NASDAQ and replace the ticker code and the URL address just to make it a little easier. And that way we can see the most active individual calls and puts to see kind of what's going on here. Now Google, which was down 2.5% last Friday, but out of that 2.5%, we see a lot of these calls and puts are expired, so we'd have to click on each individual one to see if they're still active. But you can see a lot of the calls got pretty crushed, but the puts, we have almost a 297% gain on this $120 put strike price. That's huge, and so just a lot of people are straddling Google last Friday going into Monday, and so that's huge. So the next important thing, and sometimes I always forget to remind you guys about the White House and our President Biden's schedule. That provides a massive amount of volatility, just almost as much as like economic reports and earnings, because these guys, they could say something that could scare the stock market and investors, or they could end up saying something that may cause the investors to pump stocks up. And so like they start talking about the economy and adding things and it's doing good and whatnot or whatever, or if they mention particular companies like Ford Motor Company's building these factories, adding 8,000 new jobs after they just let go 4,000, that can help provide more bullish characteristics. So it's important that we know what's going to happen before it happens, and that's what this meeting is all about. And so if we go to Google, just type in Biden's schedule, and it's the first one that pops up here. It's by, I don't know, factba.se, whatever, but that's the one, Biden or President Joe Biden's public schedule calendar. So go ahead and click on that, and every I'd say that this seems to update right at midnight at Eastern time, or that would be 9 p.m. Pacific time, which is my time zone since I'm in the Seattle region. And so at 9 p.m. my time, I can then look at that and then boom, the White House schedule all of a sudden appears. Now, I believe President has been on vacation this last week, so that's why there's just really hasn't been any help from them. So and so and that's why we see the President has no public events, blah blah blah, and so. But it's still important because they could have other speakers and stuff to provide, press conferences and stuff. And so a lot of times the journalist could also ask a question that may throw, the speaker off. And so they could also say something that could scare, investors and stuff. So it's important that, and this stuff is live. There's several YouTube channels that you can subscribe to, as well as Facebook, things you can subscribe to. So that way, when they're live, you can get the notification. But when you get the notification, though, and that's the problem, is that when you get a notification from a news company or whatever, it's already too late. Things have already happened. And that's why it's important that we know what's going to happen before it happens, because everything is scheduled to happen for a reason. And so that way we know what to expect. And that's why it's important that we save a lot of this information, bookmark it, because this is your tools. This is your ammunition to become a successful investor and trader. Is by knowing what's going to happen and knowing the level of volatility and risk and everything. So hopefully everything makes sense. Anybody have anything you want to bring to the table? Anybody want to go over anything? Screen sharing is available to everyone. You can unmute. This is a free-for-all. It just doesn't have to be me. But other than that, hopefully everything makes sense. If it doesn't make sense, definitely let me know. You can voice chat or chat within the messengers. That way I can see it. Otherwise, I'm going to assume everything makes sense and we're good to go. We're good to rock and roll. All right, everything looks good. That's good. All right. Well, guys, thank you for showing up for our meeting. We'll do it again next Sunday, but also don't forget, we're going to try to do some live trading next or tomorrow, and utilizing our this Facebook audio and video rooms and and screen sharing. Let's give it a try and see if it's something that we can do. We can do it together, because you guys can come in and out anytime that you want throughout our live trading room, and let's trade together. So we'll see you guys tomorrow and in the chat room. Thank you guys very much.